Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in corporate filings. And today we're looking at Thermo Fisher Scientific's latest report. It seems like they're keeping things on the down low with this one, but we're going to dig in and see what's really going on with their financials. Before we dive in, if you love getting these kinds of insights straight from the source, make sure you're subscribed and have notifications on. We also have a fantastic community over on Discord with the link in the description below so you can join the conversation. Alright, so what we have here is a current report and 8K filing from Thermo Fisher Scientific dated July 23, 2020-2025. Now, this kind of report is usually for a really big event happening at the company, something significant that needs to be disclosed to investors right away. And it looks like the main reason for this filing is to announce their financial results for the fiscal quarter that ended on June 28, 2025. That's the second quarter of the year for most companies. Basically, they're telling the world how they did financially over those 3 months. So they put out a press release on July 23rd to share these results, and that press release is being included with this filing as an exhibit for everyone to see. The report mentions that even though they're providing this information, it's not considered officially filed in a way that makes them liable for it under certain securities laws. That's a bit of legal jargon, but essentially it means they're sharing the info, but with a bit of a disclaimer. Now, what's really interesting to look at is what kind of securities they have registered. This table shows us what they're trading on the stock exchange. We see their common stock trading under the symbol TMO on the New York Stock Exchange, which is no surprise. But then you also see a whole list of their notes. These are essentially like loans the company has taken out that they've broken down and sold to investors. You can see they have different notes due on various dates in the future, like notes due in 2026, 2027, all the way up to 2049. The numbers next to them, like 320 delth% or 1.4 endro%, those are the interest rates they're paying on those notes. This tells us a lot about how the company is financing its operations and growth. They're using a mix of debt and equity, which is pretty standard for a large corporation. For example, they have these senior notes due in 26 with a 3.22% interest rate, and other senior notes also due in 2026 but with a 1.4% interest rate. This suggests they've borrowed money at different times and possibly under different market conditions, leading to different interest costs. And then you have some much longer term debt like their senior notes due in 2049 with an interest rate of 1.875%. The fact that they have such a long dated debt implies confidence in their ability to generate cash flow over many years to service that debt. The filing itself doesn't include the actual financial tables, but it points us to the press release which contains those crucial numbers. We're going to imagine what those numbers might have looked like based on what Thermo Fisher typically reports and what the market expects. Typically in these earnings announcements, companies will highlight their revenue, their earnings per share, and often some key operational metrics. For a company like Thermo Fisher Scientific, which is a giant in serving science, you'd be looking at things like revenue from their various segments, maybe life sciences solutions, diagnostics, analytical instruments, and so on. You'd also want to know how profitable they are, meaning how much money they actually keep after paying all their expenses. And you'd in at things like revenue from their various segments, maybe life sciences solutions, diagnostics, analytical instruments, and so on. You'd also want to know how profitable they are, meaning how much money they actually keep after paying all their expenses. Let's imagine they reported something along the lines of total revenue of, say, $11 billion for the quarter. That sounds like a huge number, but for a company of Thermo Fisher's scale, it's about what you'd expect. The real question is, how does that compare to last year? If revenue grew by, let's say, 5%, that would mean they brought in an extra $500 million compared to the same quarter last year. That's a solid increase, showing they're still expanding their business. Now let's talk about profit. If their earnings per share or EPS came in at $4.50, and last year it was $4, that's a 12.5% increase in profit per share. This is often what investors focus on because it directly relates to how much of the company's profit trickles down to each share of stock. A jump like that indicates they're either selling more or managing their costs more effectively, or both. However, we need to be careful. Sometimes companies can boost their profits by cutting costs like research and development or marketing, which could hurt them in the long run. Or maybe they had a one-off event that boosted their earnings for this quarter. For instance, if they sold off an underperforming division, that could make the reported numbers look better temporarily. We'd need to see the actual breakdown of costs and any special items in their full financial statements to really understand the health of that growth. Thermo Fisher is known for its acquisitions. They're constantly buying other companies to expand their product offerings and market reach. So a significant portion of their growth might come from these deals rather than just organic sales increases. This isn't necessarily bad, but it does mean their strategies are heavily tied to their ability to identify, fund, and integrate these acquisitions successfully. If they're acquiring companies at high valuations, it could put pressure on future profitability if those acquired businesses don't perform as expected. Seeing Joseph R. Holmes sign off as Vice President and Chief Accounting Officer is standard for these filings. It means someone within the company's accounting leadership has reviewed and approved the information being presented. Now let's put on our Warren Buffett hat and think about the bigger picture. Thermo Fisher operates in the life sciences and healthcare industries, which are generally seen as defensive sectors. People and institutions will continue to need scientific instruments, diagnostic tools, and research services, regardless of the broader economic climate. This provides a stable foundation for their business. However, they are not immune to economic downturns. If there's a recession, universities and research institutions might cut their spending, and even large pharmaceutical companies might tighten their budgets, which would directly impact Thermo Fisher's sales. Also, competition in the scientific instruments and services market is fierce. They're up against other huge players, and staying ahead requires constant innovation and strategic investment. One of the potential risks for a company like Thermo Fisher is regulatory changes. In the healthcare and life sciences sectors, regulations are constantly evolving, and new rules could impact their product development, manufacturing processes, or market access. Additionally, geopolitical instability can disrupt supply chains, which are crucial for a company that manufactures and distributes a wide range of scientific products globally. What makes Thermo Fisher stand out is their sheer breadth. They are involved in so many different aspects of scientific research and healthcare delivery. This diversification can be a strength, as weakness in one area might be offset by strength in another. It also means they have deep insights into various scientific trends which can help them anticipate future demand. So looking at this Form 8K, the key takeaway is that Thermo Fisher Scientific is providing an update on its Q2 2025 financial performance. While the filing itself is brief, it points to a more detailed press release that contains the meat of the financial story. Based on typical industry performance and the company's business model, we'd be looking for signs of consistent revenue growth, strong profitability, and successful integration of any recent acquisitions. To give you my take on Thermo Fisher, based on what we've discussed, the company generally operates in robust and essential industries. Their diversified business model and aggressive acquisition strategy have historically served them well. Positioning them as a leader, the long-term nature of some of their debt also suggests financial discipline and a commitment to sustained growth. However, like any major corporation, they face risks related to economic cycles, intense competition, and the ever-present possibility of regulatory shifts or supply chain disruptions. Their success hinges on their ability to continually innovate and execute their growth strategy, especially through strategic acquisitions. And aggressive growth strategy, especially through strategic acquisitions. Alright, that's our quick decode of this Thermo Fisher Scientific filing. What are your thoughts on their financial strategy and the industries they operate in? Let us know in the comments below, and if you found this analysis helpful, please give this video a thumbs up and subscribe for more deep dives. Don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you in the next one.